G'day everyone, welcome back to Pete's Investing. Today is May the 17th, 2023. This is the high grade copper price technical analysis. You can see here on our weekly, it's a bearish signal, and on our daily likewise it's a bearish signal, which gives us way for trading the lower time frames like the hourly. So let's look at each of these. First off, on the weekly, the main criteria is for this indicator, which is showing bearish at the moment, is a combination of the CCI 150 with the moving average 5 and 50 in decline. Likewise, the triple moving average of the price chart, 3, 5 and 60 moving averages are also in decline. So they're aligned and it's showing a bearish signal on the weekly. So that's our main trend indicator or chart. On the daily, you can see there more clearly, likewise it's a bearish signal, but we've also got this key support at 32,400 and a key resistance up here at 43,568. Now I did draw these diagonals in there. It was trending in that little wedge for some time, but it broke through that, and now it's approaching this lower diagonal. And if I zoom out, that's just along that bottom there as well, and that higher diagonal there was along those bottoms more closely, more recently. Also in this, on the daily, I've got this between that low and that high is a Fibonacci retracement. So you can see there it's broken through the 50% at 37,448 and now approaching halfway down towards the 61%. That's going to be a key level because normally if it breaks the 61% retracement, which is at 36, just above the 36 mark, we've got, if it breaks below that, we're going to see most likely rest on this diagonal as well, possibly. So that's below the 61%. So that's where we are heading, more in a bearish momentum at the moment on a high grade copper. On the hourly or any lower time frame, I've got some, the trading idea I've got here is when the fractal breaks, in this case breaking to the downside, and in alignment with the CCI and the moving averages of the price chart, similar to the daily and the weekly. When they're aligned, we take short positions. So that's where we are at the moment. And I've got up here if I zoom out, you can see that I've got a bearish program backtesting running, and that shows where it went short during the whole period, all those periods. And there were a number, these little singles were single entries and exits, and these where there's steps, it means we enter an average down multiple contracts. So that's where it approaches. So you can see there's nice profitability on that one, with the exception of those drawdowns or where it averaged down. Now to avoid those drawdowns or those average downs, again, our strategy is to trade only in direction of the weekly and daily timeframes. So at the moment, for example, when they're both showing a bearish signal, we only take short trades, and that you can see there. More recently, there was a short trade taken on the hourly chart. Likewise, during if I zoom out, you can see there during that period, for example, that's in alignment with this area where the price was going up or in a bullish momentum, and that's where the daily was showing bullish indications, and also during that period. So you would have avoided, in other words, what I'm saying is you would have avoided trading short. This is a short only program backtest. You would have avoided trading short during the upward movements on the daily and the weekly. In other words, avoid taking short trades when those indicators aren't aligned in a short momentum. So to understand how to trade this and other trading strategies, reference the links in the description below for my Patreon page. We have also do weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.